Thank you, Parvati. It has been great working with you. And, your enthusiasm is contagious. I mean, I know how many challenges you overcome to run these programs. So my support is always with you, right? Um, so before I do the presentation, can I see the poll results, Parvati? Okay, so good thing is I would say many of you are interested in entrepreneurship either in the short term or in the long term of 1 to 5 years, and most of you come from a technology background, which is great. So that's the audience I wanted to address. Thank you, Parvati, for conducting this, and thank you, participants, for sharing the information. Uh, so, folks, I hope you are able to see my slides. And good afternoon. I know this can be a little bit of a tough session just after lunch. You have to come and focus. And I hope you all had a great Diwali and you are all pumped up to move on to the next phase of your work life, right? So the title of the talk is Managing Risks in Your Entrepreneurship Journey. When you uh, when you see right now, there is a lot of interest in entrepreneurship, and everybody is talking about people want to encourage innovation, people want to do entrepreneurship, and so on and so forth, right? I mean, there is what I can say, there is almost too much of excitement and hype around that. But I mean, on the one side, I mean, it is great, as they say in the Chinese philosophy of yin yang, there is a bright side and the dark side, right? So even though entrepreneurship is exciting, I also wanted to point out what are the potential risks and how you could be prepared for that. For instance, when I started my second company, I did not know all the risks that could come up with, right? And as a result of it, I suffered a lot. And I want to share my knowledge and experience with you folks so that you don't have to, go through the pain, ideally, right? That is my intention. Parvati, the audio is coming okay, right?
Yes, it is
Okay,
clear.
okay, great. Thank you. So why is it not going to the, okay. So, the whole journey and the whole experience is possible because I could start, as Parvati said, I could co-found two companies, and these guys were my founders. Sasha was my co-founder in Radio Sherpa. This is a company that I started in Boston when I was in Boston, and he was my co-founder. He was a CEO. I was a CTO of the company. And then I started Data Glen in 2015 in India, and Tanuja and Sunil were my co-founders. Tanuja was the CTO and Sunil was the chief product officer, right? And without these guys, I would not have had the a startup experience, and I would not have had the experience that I can share with you folks today. So first about me, so you understand where I come from, what my experience and what my perspectives are. The reason why I'm giving you this background is not to, not to brag, but to tell you, because what I'm going to be presenting is not like physics, right, which is objective truth. This is my subjective experience and my perspective about entrepreneurship and entrepreneurship risks. So you understand where I come from, right? So that is the reason why. As we mentioned, I have co-founded two startups, Radio Sherpa in 2006 in Boston. That company, what it did is it provided real-time guide for HT radio. HT radio is a new type of radio technology. And this company collected, radio streams from three different cities, San Francisco, Boston, and New York, and brought the data to a cloud server. And the program guide was available on the web. So let's say if you are sitting in Chicago or even in Bangalore, and you want to listen to a radio station that is playing in San Francisco, you can do it through our radio guide and the radio streaming service. Sherpa, as you know, means a guide, so Radio Sherpa is a radio guide. And Data Glen is a company that I founded in 2015, and that company is developing machine learning and IoT technology for distributed energy resources like solar, storage, electric vehicles, and so on and so forth. Again, this system would collect data from different distributed energy sources, bring it to the cloud for visualization, monitoring, and analytics, etc. So Radio Sherpa has been acquired by TuneIn, which is a very popular iPhone and Android application. It has been acquired by TuneIn, and Data Glen is being run by the investors, right? That is the status of the two companies. And so my background, I mean, I worked in the industry for a while. I worked for companies like CompuAir, France Telecom Research, and IBM Research, and Millennial Net, etc. And in terms of my education, I did my undergraduate degree in electronics and communication from Government College of Technology in Coimbatore. And I did my master's at the MIT Media Lab in the physics and media group. So where my thesis was on a programming language for networked embedded systems or IoT systems, right? And my expertise is in both in data-driven systems and in IoT, right? That is my background. So as you can see, I've primarily been an engineer and a researcher all my life. And I come from a middle-class background in Coimbatore. And all these backgrounds kind of influence my perspective and the way I look at things. So before I go on, I want to give a disclaimer, right? I'm not an auditor. I'm not a company secretary. I'm not a corporate lawyer. And whatever I present, please consider as suggestions and not as professional advice, right? I'm going to tell you to talk to these folks to get the professional advice. It's very, very important, but I'm not qualified in any of those fields or the specialties. And one request, folks, I mean, I want this session to be interactive. Please feel free to ask questions. I don't want it to be a monologue where I'm giving a sermon and you are just listening, right? I mean, that's not the intention. Especially who are the entrepreneurs already, please do participate, please ask questions. Then only this can be effective. I've kept a lot of time for question and answers as well, right? So folks, what I want to ask you is like, if there is a for-profit startup, I'm not talking about not for-profit or a non-profit startup. I'm talking about a for-profit startup. What is the fundamental objective? What is the, what I can say, the bloodline or the oxygen of such a company? Can anyone tell me, whatever is your perspective?
Yeah. So Sanjay says to earn money. Hari says to find a scalable business model. Paurnami says customer satisfaction.
Okay. So yeah, I mean, I think Hari said to make money, right? So and Sanjay said to make a scalable business model. Yeah. So,
no, the other way. The other way.
Okay, sorry. So Sanjay said make money, and Hari said scalable business model. Yeah. So yeah, I mean, I couldn't agree more, because the reason why I'm saying is I've seen companies which are extraordinarily innovative, right? So there is this company called Thinking Machines Corporation. So this came out of MIT in early 90s or late 80s, I forget. And they were building a new supercomputer architecture. Please look up this company, where professors from Caltech, say for instance Richard Feynman, who was a Nobel laureate, who took a sabbatical from Caltech and to come and work in this company, right? And there is this company called WebVan. It doesn't exist anymore. They took $1 billion in investment, and they could not survive. The company died out. So the key, so one is, like I talked about innovation, and I talked about the funding. Okay, the next thing is the customer. Some of you mentioned customers. So even like there was this website called 4chan.org, right? So it had like some 4 million or 4 million users, where people would post pictures and share, etc., but they did not have a clear way to make money out of that. Okay, so the company, the company could not succeed. So it's because it did not have sufficient working capital. So what is important is you have to have a very, very clear path to make the money, and how do you scale that? Otherwise it's going to be very difficult to survive to have your business survive and be successful, right? um, I think somebody asked some chat question, Parvati. Is that right?
Not a question. They say working capital.
Yeah, working capital is extremely important. But as I mentioned, right, working capital alone is not sufficient. So Webvan took $1 billion in investment, working capital, but they did not survive because they could not make money, right? So finance management is the key for survival and success. So, when you look at it, this is the key aspect of every company. Every company needs to make three financial statements. One is the balance sheet, other is the cash flow statement, and third is the income statement. So, if you are starting a company, if you are an early stage entrepreneur, please do understand these three, financial statements, and make sure you maintain them on a regular basis. Maybe once a month, at least once in 2 months, kind of thing. I mean, this is important. I mean, this is like having a compass, while you are sailing in the olden days, right? It's extremely important. So, as I said, the fundamental equation of any business, when you look at a balance sheet is something which is an instantaneous perspective on the company. What is this on this particular day? What is the financial status of the company? So, how they write this equation is assets equals to liability plus ownership equity. So that means a company's asset has two parts: liability and ownership equity. If the company has more assets and very less liability, the owner's equity has more value. Let's say if a company has $100 and it has zero debt, and that means all that money belongs to whoever has a share in the company, right? That is a very simple example of that. That is what it is. But I turned this equation around slightly and said, I take the equity, that is the owner equity, to the left side. That means the right side becomes assets minus liability, right? And let's say you are not the only shareholder in the company. Let's say there are other shareholders, maybe investors, your employees, your lenders, etc., etc. So that means your equity, like let's say if there is $100 in the company, the money that is going to come to you is assets minus liability, and whatever is the proportion of the share owned by the other shareholders. Let's say there is a 20% of the shares is held by somebody else. That means you will get only $80 from the previous example that I gave, right? Liability is 0, assets is 100, and you will get $80 out of it, right? So that is what the key part is. So this is what you need to manage. You need to look at it continuously so that you can be in charge of the company. You can make the company profitable. You can make the company thrive and survive, right? So this is the when you look at the ecosystem of an entrepreneurship, right, an ecosystem of a startup, there is a principle. Somebody who is the first person to come up with a startup idea, assembles a team, asks the co-founders, and builds a company. I'm calling that person principal. In Radio Sherpa, Sasha Javed, my co-founder, was a principal. It was his idea, and actually it was his girlfriend's idea, and he started this company and he asked me to join, right? Whereas in Data Glen, I was a principal. I started the company and I requested Tanuja and Sunil to join with me, right? That is the idea. So in terms of your partners or the other entities whom you depend on to make it successful, or who you need to run the company, are your co-founders, as I already explained, the government, because most of the engineering people don't understand the importance and the power of government, right? It's extremely important. I will explain to you. Next is the investors, as somebody raised the working capital thing. Who's going to finance your ideas? Then the employees, whom you have in your team, your customers, and your banks, right? Banks is slightly, less important than the other five. So I'm not going to talk more in detail about the banks, but I'm going to talk about in detail about the other five entities. Anyone has any questions, please let me know, right? So as Parvati mentioned, right? I mean, I studied the media lab in Boston, and Boston gets extremely cold. And the winter, that is one of the things which I'm happy that I don't stay there anymore, is that, the winters are extremely cold, and, even the wind is bone chilling cold. But the thing is, in Boston, there is this Charles River, right? And that runs very near to MIT, and that divides Cambridge and Boston. And one side is Cambridge, the other side is Boston. And during winter, it completely freezes, right? It completely freezes up, and people walk. And this guy is like riding the cycle on that frozen river. So entrepreneurship is like that, okay? You are going to be walking on ice. You don't know where the ice has melted, or what has crossed a crack. And while you are walking on that ice, you can fall, and you can fall into the water, right? So it's like you need to be extremely careful about it, and you need to understand what could pull you down. So the first is the government, right? So I'll talk about what are the potential risks, and obviously the benefits of working with the government also, right? So first of all, every company, especially, must have a board, right? The company's board, it's a double-edged sword. Um, so board means that is the governing body of the company. Even you might have a 3-person company, that company still needs to have a board, right? It's extremely important to have a board, because government mandates, because government doesn't have any way of holding a company responsible, right? Because company is a non-living entity. So they associate the board members with the company's liabilities and responsibilities, etc. So the company must have a board. But it is a double-edged sword, right? What I mean by that is it has great power with respect to governing the company. It is the sole decision-making authority for the company. Whatever the decision made by that board within the norms set by the government is the final word. I mean, nobody can question anything about it. In fact, the company can, throw out any of the board members as long as there is a board majority. You can bring in more board members. There is a maximum limit. I think there are a maximum of 20 people or something on a board. But other than that, the board can do anything as long as it is legal. But it comes with great responsibility. The board is responsible for running quarterly board meetings. So board meetings meaning, like, the board member will announce, how much money has been made in the company, whether the registered office has been changed, whether we filed the taxes, and all that, proceedings need to be conducted in the board meetings. Or you need to have, like, I'm going to open a new bank account. If you want to open a company bank account, you will need to have a board resolution. So you need to have a board meeting for that. So you need to conduct a board meeting. After the board meeting, you need to register the proceedings. You need to have a board meeting minutes, and every company needs to maintain a minutes register where every board meeting is recorded and signed by the chairman of the board. And at any time in a private limited company, you need to have a minimum of 2 directors on board. And there is something called AGM. AGM is the annual general meeting where the auditors report. Every company needs an auditor. The auditor will look at the 3 financial statements that I mentioned, and the auditor will tell whether she finds any anomalies in the account. You say you have $100 in income, but you have losses of $110, or whatever. If you try to say something to get tax gains or do tax frauds, any of these things, it's auditor's responsibility to make sure the balance sheet is balanced. That's what I told you, right? The assets equal to liabilities plus ownership equity, and it matches with the income statement and the cash flow statements. So the auditor will make sure everything is okay and verify that, right? And also the board is responsible for maintaining books. Sorry, I want to say one other thing about AGM. AGM, you usually conduct it once a year, and discuss all the financial health, get the auditor's report. The director has to write the director report, and all this thing have to be filed with the registrar of company, called filing the annual returns. And the board is also responsible for maintaining the books. And also, even like, let's say if somebody resigns from the board, it needs to be notified to the government. There is something called a DIR 11 form needs to be filed, and the board has to accept the resignation by filing the DIR 12. So the reason why I'm telling you all these points is that many people start the company, like including me. I did not know what these things are, what my responsibilities were, what I need to do, etc. Right? But at least this is like getting into a car and you don't know how to apply the parking brake, or how to turn on the windshield wiper, right? Or even something more serious, like how to close the door, right? You will get into trouble. And there is this, in India, I suppose many of you are from India. In India, there is a Companies Act which is set by the Ministry of Corporate Affairs, called Companies Act to 2013. So if you are an entrepreneur, new entrepreneur, or starting a company, please at least glance through this and understand the power and responsibilities of the board. That will save you great pain, and that will serve you a lot, and that will help you a lot. And get a reliable and knowledgeable company secretary. The company secretary is responsible for interfacing with the government and filing these things and helping you maintain these registers, etc. So it's extremely important. Please do that, right? And the board also has statutory responsibilities, right? So you need to file the taxes. There is a professional tax. For every employee you have, you need to file a professional tax. You need to file income tax. You need to file GST, because when you are selling things, you need to collect a GST. You need to, every month, you have to file the GST with the GST department, etc. So if you don't, let's say if you are running a company, you are on the board, but if you don't file it, if the company does not have the money, the directors become liable, right? Again, I'm not a corporate lawyer. I mean, I don't know all the nuances, but this is a responsibility that lies with the director. So please take care of these things. And as I mentioned, filing annual returns, right? That is again extremely important, because government needs to know how much money the company made in a year, what were the expenses, and what are the taxes paid. Does it make sense? There is no fraud, etc. Right? That is important. And the next thing is the FIRC and FCGPR, etc. Let's say if you are getting foreign working capital, right? So it's FIRC stands for Foreign Inward Remittance Credit, or sorry, Remittance Certificate. And many companies, many startups I see, they want to get funding from other countries, from Europe, US, etc. And in fact, we got our seed funding from a US investor, and that cost us so much of headache, because our banker, I will not mention the name of the bank, but the banker did not issue the right FIRC, and I had to spend so much of time explaining to RBI what happened and why the filing was not done on time, etc. And then, our auditor is a very resourceful person. He took me to RBI. RBI stands for Reserve Bank of India, which oversees all the foreign exchange and financial transactions. So we had to go and explain to them, and they levied a fine of 28,000 rupees. And it took so much of my time. Instead of doing my business, I was answering RBI and explaining to them. So it's extremely important that you maintain all these things. And in fact, there are other many things, like even if you open a small office that looks like a petty shop, then you need to get shops and establishments approval, right? So that means you need to file a request, and somebody will come and inspect in your office, and they will give you a certificate, and that you need to display prominently in the front of the office, right? And any employee legal matters, it falls on the board. Like let's say, there is a girl and there is a guy, and the guy teases the girl, and the girl raises a complaint, and that is, the board has to answer. That board is responsible, right? So the board is extremely responsible, so you need to know what needs to be done and what your responsibilities are. And
Deva,
again, another professional that who can help you a lot is a supportive auditor, right? Who is knowledgeable, responsible, and supportive auditor. Because some of the auditors, they themselves mess up things. We used another auditor. That guy was making so many mistakes, and any mistakes you make, and if the government catches, there is a huge fine, and you have to explain to them, right? That guy himself was making mistakes, and we were paying late fees and fines to compensate for his mistakes. But we found a very good auditor later, and he did a great job. Any questions so far,
Deva,
folks?
Deva, there is a question. Does these apply to partnerships as well from Ruby?
Yeah, if it is a limited liability partnership, I think you need to have a board, and you need to have that, all these responsibilities. Please do whatever you do, right? Even if you are a one-person company, please talk to a company secretary and a good auditor, and don't try to cut the corners by using a cheap auditor or a cheap company secretary, because I assure you, you will end up paying a lot more in fines and in your own time and resources. Get a good one. I mean, I'm not saying that good one means someone who is and see who is a good auditor and company secretary in your vicinity, and take their service. I'm in Bangalore. If you want any recommendation, I can help you with that. Let me know. And co-founders. I mean, co-founders are like your ship captains on the ship, right? I mean, let's say in an aircraft, you have a pilot and a co-pilot, right? So you need to have extremely good co-founders. I mean, having a co-founder is like, you're going to marry someone. If you get a bad co-founder, you are done. Believe me, right? I mean, they can screw the hell out of you. So first question is, do you want to fly solo, or you want to do a group flight, right? If you want to, both has its own pluses and minus, right? But you need to make a decision whether I want to go alone or go with a group of people, right? So the solo flight considerations, right? You can call all the shots. It's your company. You do whatever you want. All the risks and rewards are with you. So this is it's your ship. You do whatever you want. But what the problems are that the investors may not be willing to fund, because they put the money into the company, and let's say if I'm the only sole founder and I go crazy, then what will happen to their money, right? I mean, so they may not be willing to invest in that kind of an arrangement, may not be able to execute large projects because you are the only one rowing the ship, and scaling can be difficult. So but the thing is, a counter example is Amazon. Jeff Bezos started the company alone, but the thing is, once he started scaling, he brought senior people with the shareholding who can help him scale the company to great heights. So you need to think about what are the pros and cons of doing it alone. Next is the group flight considerations. So the complementary skills, right? So I mean, one of the mistakes what we make is, we all feel comfortable with people who are similar to us. We are not comfortable with people who are dissimilar to us. But when you are building a startup, in your founding team, you need to have complementary skills. You need to have domain knowledge, you need to have technology skills, you need to have business with finance knowledge. I mean, this is what is very, very important, this kind of mix. In my first company, Sasha is a business guy. He did his undergrad from Wharton Business School, and I'm an engineer, so that worked out better. In the second company, Tanuja, Sunil, and myself were all researchers. We worked together in IBM, so we were completely caught off guard, and we were lost with the business and the finance and all the legal matters, etc. But if you have someone with a, MBA, but many of the MBAs, they may have just a bookish knowledge, they may not have the practical knowledge. But if someone has a business skills, because understand one thing, right? uh, Business is not a bookish knowledge. Business is about how to bond with people, how to improvise, how to set the price, how to find the market, how to do the market study, etc. It's not about fiddling with Excel or writing Python code to do financial models, right? You need to have practical skills to understand how to navigate the company in the real world, right? So you find co-founders who have complementary skills, and mutual trust and care are absolutely necessary, between the co-founders. Because a co-founder, because being on the board, one of the company that I know, there were three co-founders. Two of them sided together and kicked out the third co-founder after he worked for 2 years with almost no pay, right? So it's important that you trust your co-founders, and they are ethical, and they are responsible, etc. I've also seen co-founders who would just slack, who would not do the work. I mean, this is not like, beyond my startup, I advise other startups also. This is or I have interacted with my friends' startups, etc. So based on that, I'm sharing the experience. And this is a definite no-no. Don't ever start a company with your spouse, right? It destroys the personal relationship. It destroys the business environment, right? And most of the people who started with the couples, I mean, the couples who started the company went through a lot of pain, right? Again, take it with a pinch of salt, but if, say, for instance, if you and your spouse can start the company, feel free, but this is my suggestion, right? So what are the sample questions to ask before you onboard a co-founder? Because as I said, co-founder is like getting married to someone, right? So you need to ask a lot of questions. You need to do the due diligence before you take that plunge. Are they able to take risks? Because some people may not even know whether they are able to take risks or not able to take risks. Many of them, come with a corporate experience. They have never done startups, and they think working in a startup, I'm going to work in the startup and I'm going to become Larry Page, or I'm going to become Elon Musk one day. But it's lots and lots of pain. It's lots of crying. It's mental torture, right? So are they able to take that kind of risks? Can they take pay cuts? Because if somebody comes from I don't know, one of those big companies, and they expect that kind of pay in a startup, that's not going to work. And you may not be succeeding in a year, 2 years. It might be a long wait. Can they take the pay cut for a long time? Can they work with minimal resources? Because in a startup that I work with, like the CTO is asking, can I have 2 data scientists, 4 data engineers, four backend engineers, 2 DevOps? Man, come on. I mean, the company doesn't have working capital. How can you build an army of people? Can they work with minimal resources? So you have to be able to roll your sleeves and do the work. I mean, your co-founders need to do the same thing, right? For instance, in Data Glen, I've cleaned my own toilets. I've convinced, I had to go and talk to RBI. I had to pitch to the investors. So you should be ready to do all kind of things, so the resources are very minimal. Are people ready to come out of their comfortable, what is it? Comfortable comfort space, and do that, right? And similarly, the personal and family situations, are their personal and family situation suitable for that, right? One of the persons who wanted to be a co-founder, what happened is, co-founder of Data Glen, his family told him that if he joins a startup, he will never get married. So he was discouraged to join a small startup, and he did not start up. And somebody might be getting married and might have a child, right? And so will the startup be conducive for their own personal and family situations? Especially for women, right? I mean, if they have young children, it becomes extremely difficult, right? So it is not right to force it upon them. Parvati is a great warrior, right? I mean, she has a small child, and she does a tremendous balancing between taking care of her own child, her professional responsibilities, and putting together events like this. So kudos to you, Parvati. And also, can your co-founders handle uncertainties, because you don't know when you are going to get an exit, what is going to happen. So suddenly you might see, your bank balance is zero. You have to pay the employees. A customer who said they are going to pay is not paying. So can they handle all that kind of uncertainties, right? So if you work in a large company, so I used to work for IBM Research. If laptop breaks, I will call the IT department. They will come and fix it. On the other hand, you have to handle everything. Whether your computer crashes, or as I said, your toilet gets clogged up, it's all on you, right? And one of the things is that if you are going the group flight, prepare a founders agreement, co-founders agreement, that all the co-founders sign together with clear terms and conditions about equity. What is going to be the vesting schedule. Let's say if somebody leaves before that time frame, what happens to the equity, what happens to the IP rights, and so on and so forth. Get this done, and get a good corporate lawyer to draft this agreement. This will help you a great deal. And investors, right? Many of the engineers, right? I think we come from the background that we come from a corporate world, and come from graduate school, where your graduate advisor in IISc or IIT, wherever you study, they come and tell you, okay, I'll fund your project. They look at investors as patrons, right? Investors are not patrons. Investor is not your patron, right? They look at you as a source of multiplying their money. Many of them don't put their own money, especially the professional investors. They get money from some other source of investment, say retirement fund, or any of those kind of funds. They bring it and give it to you, and if you don't perform, then they are going to be in trouble, right? So they are going to put like a lot of pressure on you. They are going to do a lot of due diligence on you, and you have to answer them, to make them comfortable, right? And so the bottom line is raise capital only after you know how to multiply it. When you're starting the company, don't say, give me 1 crore, I want to start the company, I want to hire 10 people. Don't do that, right? And know the difference between strategic and financial investors. Can anyone tell me, it's like total stone silence on the other side. I just want to interact with you folks. Can anyone tell me what's the difference between a strategic and a financial investor?
I don't know, Deva, maybe like I could just guess because I frankly don't know the technical definition. Maybe strategic investor is an investor who's looking to enter a certain market uh, or a certain niche in the market and wants to do this as part of their own corporate growth strategy. Maybe a financial investor is just somebody, for example, who's handling a pension fund who just wants to get their return on investment, and so their metrics are different.
Yeah, you almost got it. This is Hari, right?
Yeah.
Yeah, good to have you, Hari.
Likewise, Deva.
Yeah, Hari is a good friend. I learn a lot from him. You're right. You're pretty close, Hari. So strategic is like, let's say, your strategic investor wants to bring in a new technology into their operation, right? To give you an example, let me give you a concrete example. Let's say Apple makes these iPhones, and let's say if they want to make their own chips, either they start their own division, or they can go and invest in a company that is making the phone chips, and they become a strategic investor. So they have an interest to whatever you develop to be absorbed into their business. And whereas a financial investor, their only goal is to put the money in, like say for instance Sequoia, they will put the money into anything, right? I mean, I don't know, like in carbon sequestration, and they want to multiply their money, multiply their investment. So that is what as a pure financial investors are about, right? So it's always not a good idea to go for a strategic investor in the beginning. The reason being, right, if they are not geared to take your output, if they don't have the team, if they don't have the resources to absorb your innovation, they will be choking you, and you cannot go and find work with their competitors. You cannot raise other investments because there are terms and conditions that would stop you from getting other investments, right? So it's extremely important you know the difference and raise the money from the right kind of investor. And the next one is know the cost of capital before raising, right? So that the technical term is called WACC, weighted average cost of capital, right? I will not go into the financial part of it, but what is that you are going to give it in return for giving the investment? Investor is not your uncle, investor is not your patron, right? So they are going to get equity, they are going to get rights in the company. So you need to be very, very careful before taking the money. Is it the right kind of money I am bringing into the company, and what am I going to give in return, right? And also look for the most patient capital available, right? The mindset, what happens is, when I give $100, I want to get return on it as soon as possible, right? It's not that not only that I want to make it $200, but I want to get the $200 in 3 months, 6 months, 1 year. I'm giving you a exaggerated example, but that you need to look at the return period also. How patient is the investor, right? And but you are the biggest investor, because you are going to put your time. Let's say if you're employed somewhere, you are going to give up your pay. Let's say you think working in a large company. What is it you're going to do? You are going to complain about your manager in the worst case. Your coffee is not good, lunch is not good. Okay, so beyond a certain point, you say, okay, this is not going to work for me, I go and find a different job. So investment, entrepreneurship is completely different ball game. You are going to put your soul, blood and sweat. You can't even just resign and leave, right? So there are responsibilities for you to do. You are going to make a lot of sacrifices. So know your investor and investment. And things to watch out, right? Do a thorough due diligence on the investor before discussing in detail. I know a startup, the investor who came and approached startup S1 had invested in S2, which is a competitor of S1, and got all the details and passed it on to S2. And these guys were, impacted. So be very careful. I mean, check on the investor, and especially, I mean, maybe the larger investors may not do these kind of small things, but do a thorough due diligence to see who their other investments are, what is their past track record, how do they help. All these things you need to look at, right? And then if you are first, they will give you something called a term sheet. Look at the term sheet, and then you will have to sign a share purchase agreement, share purchase agreement. So in that, you go and get it thoroughly reviewed by at least one corporate lawyer. I'm saying at least one. It's better if you get it reviewed by 2 or even 3, because you're basically signing your life and giving it to the investor. Because think of it, right? I mean, you're flying the plane, you're in the cockpit, and suddenly you are going to bring a passenger into the cockpit. If that guy is crazy, 9/11 can happen, right? So you need to be extremely careful whom you are going to bring into the cockpit of the company. So do a proper due diligence, and also be wary of conditions. Who's going to be in the board control? Some of these investors will ask, we want to be the controlling board. Some of them will say, I will control over all the reserved matters. Reserved matters mean CEO salary, your founder's salary. You can't even increase your salary. You might have been taking 5,000 rupees a month to have some decent meal, and then you want to increase it to 10,000, they will say, no, we can't, because we want all the money to go into the product development and the sales. Because for an investor to amplify their money, the only way that can happen is if all the investment goes into improving the product and increasing the sales revenue, right? So you need to be extremely careful about power over the reserved matters, and be wary of tranche investments. So what happens is, what they will say is, I will give you $2 million or whatever, and they will take the equity before investment. So that means I will give you $2 million for, I don't know, I'll say some percentage, right, 40% of the company, but I will give you $100,000 every month. So that means your investment is going to come over 20 months, but you give me all the equity upfront, right? They will take all the 40% of it. And so don't accept that, right? And also, one of the other games that they play is that they won't appoint anyone to the board, because that is a responsibility, but they will have all the control by controlling the reserved matters. So don't get desperate about working capital, because one of the things I've seen with young entrepreneurs is that they think raising a capital means they are set, they are successful. It is not, right? You are set only if you find a way to scale the company and you are running a profitable company, not getting money from the investor. You are just bringing someone else to run the ship with you. So be very, very careful about this, right? And also, when you're getting an investor, you need to see whether they are just going to give you the money, whether they are going to help you get the customer, whether they are going to help you raise the next round, whether they have the right name in the market, etc. Right? So I made the mistake of accepting to the tranche investments, and I suffered a lot because the investor could take all the equity before putting in all the money. Right? So based on my first-hand experience, I'm cautioning you on that. So next is the employees, right? So again, if you come from a big company background, you want to bring in people who are extremely experienced, and but the thing is, you may not be able to afford them, right? And also, one of the things that happens is the people who are more experienced also could be jaded. You are better off bringing in inexperienced but enthusiastic people, because they would help you, carry the weight better than somebody who is experienced and jaded, right? I mean, we had one very experienced engineer, but he was already very jaded, and it was very difficult to manage him, right? So, but he suddenly one day disappeared, right? So then, without any documentation, anything, he just left. So we had to dig through everything and find out what he has done, and salvage whatever he did and whatever we paid for him, right? And also understand, right, early stage startups may not be attractive to candidates. As I already gave the example, one of the guys who was considering, he was discouraged by his parents because his marital prospects would be impacted by taking a risky startup option. But whosoever is with you, value every employee and nurture them. There are many jobs out there for talented youngsters. Look at Bangalore. There is Facebook and Amazon, Google, Apple, anything. I mean, they can go and work in any of these companies, or Boeing. Everything is there. So you just nurture them, and make it very clear to them. Show them something that is bigger. I mean, it's not just doing some coding, and but they can make a difference. I mean, they can really grow in their career. And also, as I said, they can leave anytime. Whatever you do, they might leave anytime, because there might be a family reason they want to move to a different city, they want to make more money. There's a lot of competition for good resources. Be prepared. You need to have redundancy. You need to have some formal procedure for documenting, and people knowing about that. So even if they leave, you're not drastically affected. And be clear about ESOP. ESOP is an employee stock options plan. How much are you going to give? Be very clear. I mean, if you are going to give to one person and not to other, you need to have very clear metrics to whom are you going to give and whom are you not going to give. And don't create confusion and competition in the company, right? That's extremely important. And one of the other things that we look for in our desperations, because we don't have enough people, we look for all rounders. I mean, we will get a sales guy and expect him to do the business development strategy. Because someone who is good in sales does not mean that they are good in business development strategy. They might be good in talking to people, making them feel comfortable, close the deal, get an order, but they may not be able to think of a long-term strategy, come up with a finance plan, and a strategy for pricing, etc. That's a different kind of skill, right? Don't look for all-rounders. And customers, I mean, this is a tricky thing, right? When you are starting the company, um, you are you want to get as many customers as possible, right? I mean, as somebody already said, they want to have the customer. So you need to distinguish between B2B and B2C customers, and also there is B2B to BC, that B2B to C. That means you are doing business with one company, and that company is doing with the end customers, right? So whom are you actually serving? You need to clearly understand that. And also, what is the real value? That's called the customer lifetime value of a customer, right? Let's say you spend 6 months chasing a customer and they give you an order for 20,000 rupees. That's not worth it, right? So you need to be very careful. Whom are you going to chase? And what is the total value you're going to get? They call it the customer acquisition cost and the customer life value of a customer. You need to be very, very careful. How much time and resources I'm going to put in to get a customer, and what is that customer going to give in return for me? Be very careful about that. And also, one of the things that I've noticed is that many of the large customers, especially in India, right, they ask for a lot of customizations, and they will say, they won't pay for the customization because they are buying the product. But that itself can sink your company, because if you spend like 3 months, 4 months customizing it, that is useful only for them. And some of the customers will also say, we are giving you a knowledge of the business, we are giving you a knowledge of the opportunity to make income, so this will be exclusively owned by us. don't don't agree to that kind of customizations, because that is going to be very that's going to negatively impact your company. And also be very wary of engagements with respect to volume pricing and long-term subscriptions. So what I mean by volume pricing is, or long-term subscription, is that, like, people will say, let's say I'm going to take your monitoring service for 5 years, because I'm giving it for 5 years, give me 20% discount. But they won't pay you the money upfront, they will pay you every year, right? So that you are giving the discount because you can put the money in and get some money from the interest, right? So for instance, if you are getting subscription for New York Times or Hindu for, let's say, 3 years, 5 years, they give you a more discount, because the money you give, they can put it in a bank and draw interest on it. On the other hand, they are neither paying you but the upfront, so that you can earn money out of it, nor they are giving you whatever the fair price is. You need to be extremely careful about that, right? And also, one of the other big mistakes I've seen is that people think advance payments. Let's say somebody pays you for 3 years subscription in advance. Understand that it is not a realized income. That means the money that you get from the customers becomes your income, or it becomes part of your, what I can say, part of your revenue only after the service is rendered. Let's say you get 10,000 rupees and you have to give the service for 10 months, and you spend the money 10,000 rupees immediately, then you could be in big trouble, right? So you have to keep it separate. What you get as an advance payment, don't use it, keep it separate. Be religious about these things. This can help you very much, right? And also, the reason why I'm saying is, God forbid, but if you have to close the company down, whatever unrendered service that you have not done, you have to return the money back to the customer, right? So it's important that you don't use up the money, and you be very clear what is the customer acquisition cost and what is the customer life value of a customer. And I'm just going to summarize right now. As I said, startup life is full of surprises. Anything can go wrong. Your co-founders might leave you, your customer might sue you, anything can go wrong. Be prepared for that. And running a startup is like walking on an area covered with landmines. If you don't know what a landmine is, please look it up, right? So the landmines are like, during the Vietnam War. So what they do is, people would bury the bombs. They would get activated if somebody walks on them or if somebody touches the wire, and they will explode. But unless you walk in that area, you do not know they are being hidden. And there is a lot of there are a lot of casualties that have happened. People have lost their limbs, especially in Southeast Asia. This is a big problem. So entrepreneurship is like that. Take very careful and very small steps, and that's extremely important. Next thing is, be as quantitative and as objective as possible about every decision, right? Whether it's a customer, you look at how much money I'm spending to get the customer, how much money am I going to get in return, how much work I need to do. So the people don't understand the cost also, right? I mean, there are many different costs: the sales cost, the support cost, the technology cost, the development cost. All these things you need to be careful while you get a customer. And the principal, as I said, needs to be an all-rounder and be ready for any battles. If not, you cannot run the company. And finally, again, worst case, let's say, if at all your things don't work out, if things crash, have a parachute, right? What am I going to do, right? Let's say you try the company for 2 years, 3 years. If the company doesn't work out, will you have the skill to find another job? Will you have the experience to change your career, right? So be clear about that parachute, and then you can try that. I mean, this is like, even if you're flying a Boeing 777, they have the parachutes there with all the preparation, all the technology. They have a parachute to help you, right? They help the pilot and the passengers. Right, I've given you a bunch of references that you can look at. Please do read that Romancing the Balance Sheet. If you come from a non-finance, non-business background, and also that entrepreneurial finance. And Coursera has many courses on startups and finance and accounting. But the bottom line is like this, right? All the courses, all the talk I give, all the books cannot replace the experience. I mean, this is like telling someone how to swim from the shore, right? Only if you jump in and start flapping and doing the strokes, you cannot learn to swim. But all these things that I'm giving you are that to help you not sink and stay afloat. And if something goes wrong, how to come out safe. I hope you all, become extremely successful. And, I wish you all the best and have a great success. And I also advise startups on anything from business strategy to product strategy, etc. If I can be of any help, please reach out to me. I have a website. You can search and find it online.